Live from Hong Kong, I'm Avril Hong. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Markets digest President Trump's hints that trading partners may receive exemptions or reductions on next month's reciprocal tariffs barrage. More exclusive interviews coming up from the HSBC Global Investment Summit. We'll be speaking with the Philippine Central Bank Governor Eli Remolona in a few minutes. And BYD sales overtook Tesla in 2024 as the Chinese EV maker's tech advances win over consumers. But ARK's Cathie Wood tells us exclusively why she is sticking with Tesla shares and a price target of $2,600. Our top story today, President Trump says he'll announce tariffs on vehicle imports in the coming days, but he's indicating that some countries could receive exemptions from his April 2nd reciprocal tariffs. Bloomberg Asia senior editor Bill Ferries joins us now. So, Bill, guide us through these latest signals from Trump.
Yeah, every day it gets a little more complicated and perhaps confusing. But Donald Trump saying that some countries will be exempt from these reciprocal tariffs that have long been on the calendar for April 2nd. If you go back a few weeks, at one point what we had expected was basically a wall of tariffs coming down on essentially almost every country in the world at perhaps a low level for some, but basically universal. What we're hearing now from the president is that some countries will be exempt from that, but that it's still the plan to have tariffs coming in. The big question is which countries, how high. We don't know any of that, and it's quite possible that we won't know how it's all hitting until April 2nd when we all wake up, or even April 3rd after we've had a chance to digest what's happening at America's ports and we get news from the White House.
We'll find out, Bill. So it looks like maybe we've gone from sweeping tariffs to something more selective. But at the same time, he's also threatened 25% levies on any country buying Venezuelan crude. What's the latest on that?
Yeah, that's also a very interesting decree because quite a bit of Venezuelan crude actually goes to refiners in the United States for processing there. But two of the bigger buyers, of course, at this point would be China and then Cuba, which doesn't really export very much to the United States at all, but China, of course, does. President Trump was asked in Washington whether that means the 25% tariffs on Venezuelan crude purchasers would be on top of 20% tariffs that China already faces, and he seemed to suggest that it would be. But again, I think we've seen with these other tariff announcements that there's always quite a bit of wiggle room. There's room for negotiation. And I would frankly be kind of surprised if we wake up and find out that there are 45% tariffs on China. But we'll have to see. We're waiting more clarity from the White House, and we may have to keep waiting until April 2nd.
Yet more tariff uncertainty. Bill, thank you so much. Bill Ferries, Bloomberg Asia senior editor in Singapore for us. Let's take a look at how markets are shaping up because, as Bill alluded to, it's really the continued overhang for Chinese stocks as we see potentially yet another round of levies going into place for the Asian nation. And the stocks there are leading declines in the region. The rest of the Asia Pacific looking a bit more mixed despite the really solid handover from Wall Street. And this is, of course, against the backdrop of potential that we see narrower tariff scope for some of these countries where reciprocal tariffs are concerned. We are still seeing markets pricing in a lower number of Fed rate cuts, especially against the backdrop of Bostic's comments. Maybe we only see one cut this year. I think Swaps is pricing in something like 2.5 So higher U.S. yields overnight. We're seeing a bit of pressure in Japan as well. And all this is kind of feeding into what we're seeing in other Asian currencies, with the Indonesian rupiah falling to its weakest level since June 1998. And this was, of course, in the midst of the Asian financial crisis, and the slump in the Indonesian rupiah by more than 3% since the beginning of the year is, really exacerbating the fear surrounding Indonesia. MLife strategist Mark Cranfield joins us now from Singapore. So, Mark, the Indonesia slide, the rupiah that is really grabbing headlines. Talk to us about the factors at play here. How much of this is idiosyncratic because of fiscal discipline concerns for Indonesia?
That's a big part of it. Confidence among foreign investors obviously is very low. They don't seem to have a very good opinion of some of the policies which are currently coming out of Jakarta. And so they're taking their money off the table. You can see that traders have become very defensive. Bond flows have stopped going in. Equity flows are also negative. And now it's also translating into a much weaker currency as well. This is a typical macro reaction that you get when particularly foreigners are not so keen on any particular market. You can see also there's a spillover from Turkey as well. These are all in the emerging market bucket, and they tend to feed on one another. We've seen it before when the Turkish lira is under heavy pressure. That makes life difficult for all of the so-called high-yielding currencies in that world. Indonesia would be certainly part of that. But Indonesia's problems, to some extent, began even before Turkey came back into the spotlight. Now, they do have a sovereign wealth fund, which they're trying to get going, and that is helping to support equities to some extent. So you could easily get this situation where the sovereign wealth fund is very focused towards propping up the local equity market. That gives it some support, but there's not too much they can do about the currency as long as they leave it free floating. They may, of course, come in very heavy-handed in terms of intervention to keep the rate stable. But when you have so many offshore factors which are weighing against it, it makes it very difficult. So it's not just other EM currencies, it's also the fact that you've got people like Mr. Bostic saying that maybe only one interest rate cut is now needed from the US. That will prop up the US dollar generally around other currencies as well. So there's a lot of things weighing on the outlook for Indonesia. So for now, they're probably fighting fires and trying to decide which one is most important. It looks as though supporting equities for now is their priority.
Mark, I mean, in prior conversations, we've kind of discussed when it comes to Indonesia stocks, what we're seeing among the bank stocks just because of how liquid it is. How closely do we have to keep an eye on that? Because, that kind of determines the direction of the market.
Certainly, they are a very large part of the market. They're also the place where you would expect foreigners to have the largest holdings as well. So if there's any indication that offshore investors are becoming a bit more confident in Indonesia, they would certainly look at the banks probably first. It's also from a psychological point of view, the authorities in Indonesia would want to stabilize the bank stocks ahead of anything else as well, because if you don't have a stable situation going on there, it gives a very negative feel to the whole market. So making sure your major banks are performing well is certainly going to be right at the top of the list for trying to get people more interested in that market. But it's not going to be easy. They're going to have to work extremely hard, and they're going to need a bit of luck as well from outside. They could really do with the US dollar turning around. They could do with some weakness in the US currency. Maybe that'll come next week. If the overall set of tariffs which come into place once again are seen as being a US dollar negative as they were earlier in the year. If that comes back into play, that will certainly help some emerging market currencies, including the Indonesian rupiah. But between now and then, it will seem like a very long time and a very nervous situation for anybody who's trying to trade the IDR.
Mark, I mean, that reprieve, I think, would be welcome for the Indonesian rupiah, but how much ultimately will we see, given how the likes of Bostic only expecting one cut for the year? How does that also feed into what we're seeing in US yields?
Well, some people are looking past that. If you think of what Cathie Wood said earlier today on television, she's certainly in the camp that she thinks the Federal Reserve will cut by more. She still thinks that there'll be at least two, and that the Fed, in a sense, will come to the rescue later in the year. The US economy will need the support of lower interest rates from the US, and that will be something that bails out the equity market. What position we have to get to first is another matter, but certainly there are people like Cathie Wood who are very optimistic that yields are going to come down, and that's going to be good for stocks. And If we do get a case where US unemployment rises a bit, that's certainly negative. The Fed will have to respond to that. Although yields are going up, it's going to be more about steepening of the curve. It's not just going to be about short-term yields. We're probably going to see kinks in the curve where investors are concerned that the Fed is a bit too complacent on the inflation outlook. They've said they're willing to look past it. That's not something that long-term investors like to hear. So you'll probably see long-term bonds coming a bit more under pressure. But the short end of the curve, which is much more responsive to Fed policy, those yields can probably stay down. So a steeper curve, people thinking that the Fed has got more to do in the second half of the year. In the end, that could be supportive for the equity market. But it's going to be a very volatile ride before we get there.
It's interesting, right? Because the word transitory has been bandied about on inflation, and we know how it ended the last time it was used. Mark Cranfield, Bloomberg MLive strategist for us. Great to chat as always. Well, in the exclusive interview to Bloomberg, Atlanta Fed President Raphael Bostic also says the big question is how consumers will react to higher prices.
My projection of where inflation is going to go this year is pretty much sideways, and we won't get back to a more neutral level of inflation, our 2% target. I don't project until sometime early in 2027. But it is very much hearing people, take in the latest news, figure out what that means for them, and then I will respond to that in terms of how I think about the economy's trajectory and policy.
Last month you said you thought that we would have 2 rate cuts this year. The dot plot didn't change, still calling for 2 rate cuts, but a number of people moved their dots up to say maybe we get fewer than that. Were you one of those?
I was one of those. So I was at 2, I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, some of your colleagues also moved their dots down, suggesting that we might see more rate cuts, probably because they think the economy will weaken. What do you think the odds of an economy weakening because of fiscal policies are?
Well, what I would say is I am hearing more concerns about the trajectory of the economy. That's undoubted. But what I also will say is the data that's come in to date has not actually shown that, and we've still seen a resilient economy. I do know that consumer sentiment has started to take a dip, and the question that we face right now is consumer sentiment going to be a leading indicator like it was pre-pandemic, or is it going to be something that doesn't really translate into actual observed behavior in the economy, that as how it played out for most of the pandemic? Right now it's an open question, and it's one of the things I'm going to be watching very closely in the months to come.
Well, it's hard to know for sure what consumers are going to do, but you talk to business leaders all the time. What's the general attitude of CEOs right now about business outlook and about their plans for, say, hiring or even raising prices?
So, we actually have started to ask our business leaders exactly this question. Where do you think pricing pressures are going to go, higher or lower? What we've heard consistently is they think they're going to go higher. Then we ask, what do they think is going to happen in terms of their sales? And they're also quite bullish on the sales rising as well, which says to me they think that consumers are going to be able to manage these higher levels of prices and whatever changes in prices that happen moving forward. We'll have to see if that actually plays out. I think that would be one of the big questions and stories that emerges through the course of 2025, namely how the consumer manages in the face of these elevated price levels.
You're watching Insights, and of course, China hoping to orchestrate a consumption-led recovery. That's in the spotlight. How does this feed into corporates? Yum China CEO Joey Wat says understanding consumers' emotional values is key to ensuring a successful journey from product conception to market rollout. Wat spoke to us exclusively at the HSBC Global Investment Summit and told us how the company has begun using AI to improve customer relations.
So consumer right now has evolved a little bit compared to a few years ago. So when we are thinking about new product or how to market the new product to consumers, we have to be very clear that consumer right now has 2 worlds. physical world and the virtual world. And for us as a company, we have to deliver both the value in the physical world, such as good product, high quality, good value for money, and the emotional value for the virtual world. And that emotional value is very important now, which is something that as a marketer, as a consumer company, we have to keep learning what exactly is that and how to deliver that.
How are you seeing AI factoring into your business? I'm thinking not just about your production, but also more broadly your operations. I mean, how much efficiency is it adding?
We are really only still at the beginning of the journey, we believe. We started the AI journey from our company project management's point of view from 2020. But we start to build the database of our membership since 2015 when we roll out the membership. And right now we have about 500 million membership in our system. But since from 2020, we start to digitize the processes and the data, the knowledge across function. But by 2023, the AIGC, inspire us to go to the next step. So we transform ourselves from just using the AI to help the business, but also use generative AI, make it more interesting, more human between the staff and et cetera, et cetera. I think it's still at the beginning, but we definitely see the potential of it. Let's give supply chain as an example. We have the data, we have the visibility of our inventory, we have the traceability of our inventory. Right now, AI is helping us in each of the store to do the inventory ordering and inventory management.
We're almost out of time, but I need to ask you about where do you see pricing trends going this year in terms of, in other words, what does competition look like for the rest of this year in your view? And all the conversation around tariffs, is any of your supply chain exposed to what's going on outside?
We are fine. The tariff is not an issue for us because more than 90% of our sourcing is done locally. We do buy a lot of durian from Southeast Asia.
Okay.
Because
I'm not sure they're subject to tariffs.
No. And Chinese customers love durian pizza, and it's growing very nicely. So tariff concern, we are not exposed to it. In terms of competition is always very intense, and for us, this is a good news. Means that internationally, locally, people are still seeing the potential and the market potential for our business going forward in such huge market.
China CEO Joey Wat speaking to Bloomberg's David Ingles and Rebecca Chong-Wilkins. And of course, amid all this, we've been seeing how Chinese tech stocks are really leading declines in the region today. The Hang Seng Tech 3% down, these tech stocks nearing correction. And of course, it's part of this negative news flow, including from the likes of Xiaomi, short-term negative potentially after it confirmed its upside share sale. And looking as well at some of these currencies, renminbi on the back foot, along with some of these other Asia currencies. For more on the Philippines, let's cross over to the HSBC Global Investment Summit, where Bloomberg's David Ingles is standing by with a special guest. David?
Yeah, April, thank you so much for that. Yeah, joining us here in set is Eli Remolona, of course, the governor of the Bangko Sentral ng Pilipinas. It's a pleasure to have you in the show. My colleague just in our studios talked about the currency, and we've been trading on the stronger side for the last 6 months.
Yes.
Do I take it you're less, if not active in the currency markets?
We've been less active in the last few months. We were fairly active in October, I think, but...
okay, so that's gone away as well.
That's gone away, yeah.
There have been, not so much the peso itself, I think today the Indonesian currency, not sure if you've seen it, it has touched a level last seen during the Asian financial crisis. And I'm wondering, are you putting out insurance policies out there in terms of the peso? Like, what are you prepared to do to prevent this from Do you think that's an idiosyncratic issue, or do you think there's something more?
I think this is idiosyncratic to Indonesia. What's happened in the last few weeks is the dollar has weakened in the last few weeks. And when that happens, there's no direct effect on inflation in the Philippines.
Right.
The exchange rate is asymmetric in its effects. It's when the peso weakens, if it weakens enough, there's pass-through into inflation. But when the peso strengthens, the effects are very indirect.
You've talked at length about the preference for lower rates.
Yes.
I think it's 50 basis points that you've penciled in. Is the exchange rate at all a factor in your decision making in taking rates down?
It is a factor, but it's not the main factor. We worry about other things. We worry about our projections of inflation. We worry about supply shocks.
Right.
But not so much the peso exchange rate, unless there's a big swing.
Of course, then it becomes inflationary.
That's right.
The next meeting is April 10, which is in about 2 weeks from now.
Yes.
Suffice to say, if we don't get some unexpected economic shock, are you inclined to cut interest rates on April 10?
Well, we are on an easing cycle, and yes, there's a good chance that we will cut by 25 basis points.
Right. And currently, is it 50 basis points for the year that you prefer, or are you leaning more towards 75? And what is determining that option?
It could be as much as 75.
Okay.
Depends on the data, of course.
How much does the Fed feature into that? If the Fed does more aggressive, and there's a sense that the Fed might need to move slightly more aggressive now.
Yes. The Fed figures in a little bit. What the Fed does affects the global economy, and the global economy affects us. But the direct effect is not very large.
Okay, understood. Well, stay put. There's lots more to talk about with you. Lots on the macro front as well. I want to get your thoughts on inflation and certainly with the reserve ratio requirement, which I believe you still think is a little bit too high at 5%.
Yes.
We'll be back here, of course, on set here at the HSBC Global Summit with Eli Remolona, of course, the governor of the Bangko Sentral. April, I'll send it back to you first in the meantime.
A great conversation so far, David. Of course, we've been seeing the peso under pressure today, but worth noting that year to date it is managing to clock some gains, and the Philippine stock benchmark also hasn't been performing as badly as some of the other peers in the Southeast Asian region. Of course, what's been kind of hogging the spotlight are the declines on Indonesian stocks, but today we're seeing a bit of firmness along with the Singapore benchmark. I think those gains helped along by the lenders, but it's more or less risk-off in the region. Take a look at how the rest of Asia is looking, as I think Japanese stocks have been pairing some of the earlier gains, looking a lot more cautious as the session progresses. Maybe more of that tariff concern is creeping into the markets. Now, coming up, Xiaomi raises more than $5 billion in an upside share sale, aiming to expand its electric vehicle business. The details next. This is Bloomberg.
All right, welcome back. You're watching Bloomberg Television. Still with us here at the HSBC Global Investment Summit is Eli Remolona, Governor of the Bangko Sentral ng Pilipinas, Philippine Central Bank. We touched on the preference for lower rates moving forward. Obviously, the main function of that, to your point, is the inflation outlook.
Yes.
What's the balance of risks right now when you look at inflation?
Looking at 2025 and 2026, we're looking at somewhat more upside risk than downside risk. Right now, inflation is around 2.1, and the ceiling of our target range is 4. We may be in the 3.5 range in the next 2 years. That's still within the target range, but we'd like it a bit lower than that.
What components specifically do you see as perhaps having some more upside risk than
Yes,
other parts of the basket?
Well, thankfully, rice is no longer a risk. The price of rice has come down quite a bit. But there are factors like electricity rates and transportation rates that threaten to raise inflation. But we'll see. We'll see.
Okay. Now, the other tool that you have, not so much a monetary policy tool, but certainly something the markets watch, is the reserve ratio requirement.
Yes,
and you've been on the record as saying 5%, that's still on the higher side.
Yes,
of things.
yes.
Help us understand the timing and the magnitude of where you want to see that interest rate and by when.
Yeah, for us, the reserve requirement is a distortionary measure. So we'd like to reduce it to as low as 0. But we have to manage the liquidity implications of it before we do so. So we, as you know, we flooded the market with liquidity in 2020, and we're reabsorbing that liquidity. We don't want the reserve requirement, the reduction of the reserve requirement to stand in the way of that reduction of liquidity.
Right. So gradual is clearly the path forward there. Do you see any specific moves to the reserve ratio this year, so, for example?
We'll see. We haven't. We're still doing the math on that.
Okay. And is the indirect implication of that concerns over upside risk to inflation in terms of you flooding liquidity into the market? What are the considerations
there may be a little bit. If we mismanage the liquidity implications, there may be some upside risk to inflation. That's why we're looking more carefully at that.
Right. Now, when I look at the external picture, we were here, tariffs have come up a lot. I know that's not so much a big issue for the Philippines. Maybe it is. There's the Federal Reserve.
Yes.
There are other things. Among the many, many things we could over-obsess, what do you think is the single biggest external factor that is most material to the economic fortunes?
Right now, I would say what I would call the befuddling uncertainty that we're facing. The tariff war is likely to cause a rise in inflation somewhat and a slowdown in growth somewhat, but we don't know by how much.
Right.
This is still tough for us to figure out.
I think we have to wait for the jury. The jury's still out on that.
The jury's still out. Yeah.
Governor, final question for you. I mean, not a lot of people know this outside the Philippines. You know, the percentage of the economy that is reliant on consumption and domestic demand is among the highest, really, of any economy, agnostic of where they are in their development cycle. And the reason I bring that up is, we talk a lot about how China's looking to stimulate domestic consumption. And I'm wondering, do you have any tips and what your thoughts are on what they're doing so far in being able to achieve that?
Yeah, we have the opposite issue. Filipinos consume too much, save too little. So we're moving in the direction of higher quality investment. Monetary policy will encourage more investment if it succeeds in stabilizing the economy at levels that are close to full capacity.
Right.
But other than that, there's not much monetary policy can do with respect to sustained investment.
Okay, so it's really up to the consumer. I guess, speaking of full capacity, we're almost at full capacity here.
Yes.
With one of the sessions just wrapping up. So before the decibel level becomes more than we are attuned to, Governor, thank you so much for the time.
You,
and I know you have a busy day ahead. Governor Eli Remolona there ng Bangko Sentral. Thank you, Mr. Stevens.
Thank you.
Thanks so much for that interview. Very candid conversation with the Philippine Central Bank Governor. And of course, as you highlighted, we're really seeing that element of consumption playing out, not just in the Philippines, but also among Chinese EV stocks. There's been a lot of bubble talk as well. The likes of Zhou Cai of Alibaba saying, there seems to be some bits of a bubble that are emerging in the build out of AI data centers. So even though we saw sales knocking things out of the park for BYD and then for Xiaomi, that upside share sale with potentially long-term positive driver. These are the EV stocks that are sinking really in trade today as we approach correction on Chinese tech stocks. And indeed, ARK Investments CEO Cathie Wood did say that she remains bullish on Tesla. And I think, David, you had that really interesting conversation with Cathie Wood of ARK Invest.
Yeah. So I was wondering what we were going to chat about, Avril, and I was actually wondering what your agenda was while you're visiting us in here in Hong Kong. I can't seem to catch you in the studio. Every time I'm in the studio, you step out and do something. I was there this morning, caught you for 2 seconds, and then I'm here, and then you're there. But anyway, we can talk about Cathie Wood. Why not? So interesting, right? So they're a big believer still in Tesla, unsurprising. They've been buying here. They've been very active recently with the stock drop, and they think the bull case remains very, very much intact. The other thing we talked about was BYD, and can a rally between Chinese tech and U.S. tech coexist? And by no means is the call on Tesla a function of BYD, which they say does very, very spectacular things. The other thing we talked about too is their new. They've been nibbling this week. They just started doing it. They've started buying some Baidu stock. So all of those topics, have a listen.
Elon has announced that Tesla will launch its robotaxi service commercially in Austin, Texas in June. That is when analysts are going to have to put into their models what a robotaxi service is. And it's a software as a service model. Right. Very high margin, 80% plus for platform companies, whereas the electric vehicle is 15, 20, 25% gross margin. So we think that robo-taxis will account for 90% of the value of the company in 5 years. And we're on record saying we believe in 5 years the stock will hit $2,600. And that's not even including humanoid robots, which are now moving into the Tesla ecosystem much faster than even we expected. So more than a tenfold increase just from robotaxis. So.
You're not concerned over, let's call it noise, because of Elon Musk's role with the government, for example, and how that may or may have not contributed to the risk premium of the stock?
Yes, I think this is one reason the stock is down 50%. It's been cut in half. And I think this is all very short term.
Let me pull in the China factor here into the Tesla story. Mm-hmm. And one of the, I think, more common observations that we've heard from analysts in this part of the world is that Tesla in China as a final market currently has a somewhat inferior product compared to the competitor. Is that an argument that you buy?
Well, if you look, it depends on what you mean by inferior. So we're looking at the BYD cars, and they are fabulous in terms of, from what we can see, fit, finish, design. If you look at metrics like range and power for a given price, Tesla is still very competitive, if not the most competitive, depending on the model of car.
Right. But, there's nuance there.
Yes, but BYD is, from a cost point of view, moving down the consumer electronic battery cost curve, just like Tesla is. So actually, we think it's great. We think competition is great, but more important for new kinds of technologies is scaling those technologies, which both Tesla and BYD are doing. And when unit growth increases, costs come down even more. So we think Tesla and BYD are both in the lead from an EV point of view alone. Right. If you layer in robotaxi, of course, BYD is not seizing the moment there, at least not yet.
Okay, I know I said one last question on Tesla. You opened one door. Very quickly, worst case scenario. Let's extrapolate worst case scenario. In the event that Tesla does not do well in China, in the slightest event it doesn't, for example, and you point out, of course, that they are still very competitive there, does the bull case still hold up for Tesla if they, say, lose that market?
We do believe that China is very important to Tesla, and I actually think that Elon Musk and May Musk, his mother, are sort of ambassadors for the United States.
May Musk is a big star in China.
Yes, and rightly so. But to answer your question directly, if China were to fail, that would be a short-term hit to the stock. Would it take us away from $2,600? No, because the robo-taxi story is much more a function of the Western world, where ride-hailing costs are so much higher than they are in China.
Cathie Wood of ARK Investment Management speaking exclusively to Bloomberg. And as you heard there, it's really about Tesla, part of that Trump trade, but also how that's played out in crypto so far since the election. And indeed, we've seen that huge run up to about 100K this year on Bitcoin, but now it looks more like, there's a distinction between rhetoric and actual implementation on digital assets, regulatory environment. Bitcoin, part of the risk-off, I think, today. And staying with crypto, David and Rebecca Chong-Wilkins, another guest from the HSBC Summit. David?
Yeah, I have a feeling I've been on TV too much today.
Right, how many hours? I watched the first interview with Cathie Wood.
Oversaturation.
And that's Lucy Gazmararian. I was chiming in as well. She did watch, of course, that interview we just played out there with Cathie Wood. Let me introduce her properly. Lucy Gazmararian is here with us on set, founder and managing partner at Token Bay Capital, a VC firm, of course, that invests into Web3 and crypto startups. To your point there, Avril. Well, okay. So what have you been busy with apart from listening into Bloomberg TV a little bit too much?
Overexposure of David Ingles. We can never get enough.
I think, listen, the big headlines have really been coming out of the US. We're having a sea change in the world's biggest economy that are not just sort of allowing crypto, they're actually embracing it and want to be the front runner. They really want to own this industry, they want to be the leader in this technology, and that's really set us up in 2025 for quite a spectacular platform of how this is going to play out over the course of this year. I mean, if anybody had come out with any crypto predictions at the end of 2024, this was not it, right? A Bitcoin strategic reserve, in our wildest dreams. But here we are, actually living and breathing crypto being a top-down, macro, government-led order from the US president. So that's going to really trickle through to the industry. And we actually are just beginning to see the green shoots of that. So with regulatory clarity and the institutions can now move into the space, they're basically being given the green light. And we're seeing a pickup in crypto M&A, which is really interesting because it's giving participants a lot more confidence to start investing in the space and really sort of building businesses now for the long term and actually be the winner in this space. So I think we've got an incredible start for 2025 and onwards. Interesting that the markets have actually sold off. I think crypto has been rolled up into this bigger macro concerns, and actually this sea change is leading to a lot of volatility in the markets. But actually, if you take away that noise and you actually look at the messaging when it comes to the crypto ecosystem and blockchain economy, it's a really powerful time for the industry.
I mean, nonetheless, there is still a question mark, I think, for many over precisely what the strategic Bitcoin reserve, what that actually looks like, how that plays out. So in your mind, what are the assumptions that you're making about what that looks like, and what some of the risks are? I'm thinking particularly perhaps around moral hazard, for example.
I think what's interesting with the Bitcoin reserve is that they've come out and issued a statement and a policy on their Bitcoin holdings. Let's not forget that actually the government already is a holder of Bitcoin, but it's becoming intentional about that holding now. It's actually making it an active strategy that they want to build upon. So I think what we're seeing in this first iteration is phase one of the Bitcoin strategic reserve, getting everyone comfortable with the fact that now the US government believes that it is of national security issue, it is of strategic significance, because it is the first non-government money. And it's interesting that the world's most powerful government actually wants to have a big stake in the world's first non-government cryptocurrency. So it is phase one where they're trying to work out how they're going to fund this, how big is this reserve going to be, are they going to buy more Bitcoin from Congress to do so? And we have the beginnings now. What the Bitcoin strategic reserve looks like in 5 years could be very, very different, right? And by that point, we may have other governments, other countries, all like holding Bitcoin in an intentional way as well. Because again, let's not forget, a number of different governments around the world already hold Bitcoin that has been seized from illicit and criminal activity on the internet.
And that brings to mind then, what kind of asset then are they adding to their reserves? Because to your point, this year, it's sold down because of the macro. In some years, it's a hedge. Yeah, central banks, we had a conversation earlier on with the Philippine Central Bank, and I didn't get to ask it, but gold, for example, is a strategic reserve because it doesn't behave like the other assets they hold. So can I ask you the question, what is this asset that they're bringing onto their reserve? Because that's a...
Yeah, I think there's two aspects to this.
Yeah.
I think one, it's a very new asset. It's still, gold is really old. I mean, thousands of years. I don't actually know when gold was first discovered, but it's really old. Bitcoin is 16 years old, and it's really only taken off, in the last decade, say, in terms of mainstream reporting and consciousness. That's incredibly new. The second thing about Bitcoin is that it needs to be understood because it's a fundamentally new type of asset technology. It's representing native internet money. And that's a concept most people are not familiar with. I think if you ask the vast majority of people in this room what Bitcoin is, you kind of get a number of different answers and probably quite a few blank faces. They know they should know about it. They know it's important, but what actually is it? And if you take the time to sort of look into what Bitcoin is, fundamentally it is something very different. As I say, it's non-government money. It's now being viewed as a form of digital gold as we move to a global digital economy. And so while in the short term there's a correlation with macro and it's kind of a risk-on-off asset trading along with the NASDAQ, actually over time we should see those correlations break down as it's actually value from what it brings to the overall asset classes globally that we have and really distinguishes itself from the other assets.
I guess to your point, Dave, though, in terms of asking that question of, what is the point of Bitcoin in your portfolio? Like what kind of asset are you holding? That expectation has changed a lot, even just over the last few years among investors themselves. If we think about venture capital space, the expectation has shifted that now we're not necessarily wanting to bet on promise or future exponential growth, but on something and profitability revenue that we're seeing now. So is this a sort of short-term trend that's responding to risk-off appetite and, as you say, some of these global currents that are going? Or are you seeing this as a sort of more long-term shift in what investors are looking for, particularly in the VC space, when it comes to crypto?
So I would distinguish between Bitcoin as a cryptocurrency and then the VC space. So what I'm focused on is actually investing in crypto businesses, building new blockchain infrastructure that's going to underpin our global financial economy. And also, it also extends to sort of social media and of the new internet. And then there's liquid cryptos, right? So you've got Bitcoin and Ethereum and Solana. So I think that they're kind of two separate things in terms of VCs focusing more on sort of companies and new upcoming protocols, and then Bitcoin. But when it comes to Bitcoin, we are getting broad acceptance now. I mean, BlackRock, the world's biggest asset manager, has now added Bitcoin to their model portfolios as a diversifier. Now, they're not doing that to change their mind in 2 months' time. When BlackRock adds it to a model portfolio, they're making, institutions don't chop and change. When they invest, they have very long time horizons. So we can expect this just to get bigger and bigger and more important. And actually, the institutions haven't yet moved into being fully bought into the whole Bitcoin story. They're still evaluating. Now they're under pressure because it's sort of, you've got the retail bottom up and now you've got the President of the United States. And there's still this gap in between of sovereign wealth funds and pension funds. And when that, gap gets filled, we are likely to see a big jump up in Bitcoin's price. Also, broader and broader acceptance that this is an important asset as we move to global digital financial markets.
Right. Final question. Room full of bankers. What's the message? How do we need to be thinking about this at this point in time?
I think it's wonderful that crypto is now so mainstream that it actually has to be included in an agenda from a mainstream bankers conference.
Right.
There was a time where crypto conferences were separate. Now you cannot have a global financial conference without crypto, without Bitcoin, without these conversations. And that's really exciting. And that obviously says a lot of where the market's going. So, when people get concerned Bitcoin's selling off 20%, 30%, I think take a step back and actually see where this industry is headed.
Lucy, fantastic. Thank you for taking the time to speak with us here. Of course, busy time. No conference is complete now. Of course, that part of the virtual assets part of the spectrum. Lucy Gazmararian there, of course, out of Token Bay Capital. Right. We had a conversation earlier on with the HSBC CEO, 6 months into the job, his first interview to talk us through really this simplification process, this restructuring and where they are as far as that's concerned. Here's my interview earlier on with Georges Elhedery.
What we announced is we will be incurring about $1.8 billion of cost, essentially severance cost.
Okay.
that the saving, most of the decisioning for that will take place this year. Most of it will take place in the first half of the year. That the benefits will start materializing this year, where the $300 million benefit will come this year. That the benefits will materialize in full by the end of full year 2026. So the full year 2027 will benefit from the full $1.5 billion saves that we're targeting. What we also committed that these will be permanent saves going forward, and that we're taking these saves straight to the bottom line. So it's a payback period of effectively roughly 2 years, but it's a permanent benefit that we will achieve.
And then the other component there is a further $1.5 billion, which I was looking at your earnings statement, and it was page 11 or 12, I think, of the strategic review. And the way you phrase it there is a reallocation of those costs into growth businesses. So I think it's a two-part question I have is, if you're reallocating costs, is that a net savings? Is $1.5 billion net savings? And what exactly are you looking at doing? Because there's not a lot of detail on that.
Yeah. So the organizational simplification benefits, which are efficiency saves, not impacting revenue in any material shape, $1.5 billion, those will be taken to the bottom line. That's the first $1.5 billion.
Yes.
Now, additionally to that, we're also looking at the what we do and recognize that there are further focus that we can achieve in our business, where we will be taking $1.5 billion from activities that we are currently doing that are either non-strategic or non-returning, and we will reallocate these $1.5 billion as we materialize the saves. We reallocate them back into areas where we have competitive strength, where our customers expect us and need us to be, where we can generate good returns, and where we have greatest opportunities to grow. This second $1.5 billion, the revenue we will lose against it because we will be stopping activities.
Those units, those assets, yeah.
Those assets. We expect to be able to generate better quality revenue instead, because they're more strategic or higher returning.
And have you told your team, have you given a timeline for that second tranche of?
Yeah, we expect to do it in the medium term, but there are a number of these initiatives which we already communicated to the market. For instance, about $300 million of this $1.5 billion will be delivered through our decisions around investment banking, in particular M&A and ECM, in Europe and in Americas, where we're basically scaling down this activity. And others will come from other inorganic activities, such as the sale of our German private bank business, the sale of our French insurance business.
The timing of perhaps, and I know it's under review, so I'm not sure how much detail you could give at this point in time, but you mentioned a lot of those decisions will be made over the next few months. And correct me if I'm wrong, I think the timeline you gave was you want to complete the review by June of this year. When do you think you'll be able to make meaningful announcements?
So with regards to the efficiency saves, most of the announcements are done. The rest is execution. We will be able to talk to how much we've decisioned. But again, we have committed to achieve these saves by the end of full year 2026. So we're working on that timeline.
Right.
With regard to the reallocation of costs from non-strategic or low-returning areas to strategic, areas of stronger competitive advantages and higher growth prospects, and obviously higher return prospects, we will announce as and when we have something to announce. So as I said, I've shared with you some of the ones that we've gone public with, and then the rest, as and when we're ready to announce, we will make it public.
What's the message to employees, though, who I'm sure you understand and can empathize with? There's a level of uncertainty out there over job security. What is the message to employees? Well,
the first message to employees is a big thank you, because the momentum that we've been driving with this business and the results we've generated, as was communicated in February for our full year 2024, is the focus, the relentless focus of our employees and their focus on supporting our customers. And obviously a major thank you to our customers because of the trust that they placed in us to give us their business. And it's very important that we carry on this mission. Primary mission is to serve our customers. Customers are at the heart of everything we do, and then serving our customers remain a primary, unwavering objective for all our employees, whether you serve them directly or whether you serve other employees who are in turn serving those customers.
Is talent retention an issue at this point as you go through this painful but necessary process?
Yeah, so it's inevitable that when you go through similar organization simplifications, there are some roles, mostly at the senior level, where you have duplication and where at the end of the day you will lose some roles or some individuals due to the duplication of positions, mostly again at the senior level. So that is an inevitable outcome from such an exercise. But in general, we're a bank that highly values talent. We're a high performance culture. We want to attract talent, we want to retain talent, we want to train talent, we want to give opportunities to talent, and we want to be able to reward them competitively.
And you know, a lot of the focus.
The China Show co-anchor David Ingles speaking exclusively with HSBC CEO Georges Elhedery, and you can watch more of that interview on the terminal and online. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.